Welcome to class, students. Today, in this Module 5, we'll be looking at a very important topic titled Property and Casualty Insurance. Property and Casualty Insurance. Module contents: we have introduction, we have auto, homeowners and commercial property insurance, we have homeowners insurance, we have standard coverage components, that is HO3 policy, we have exclusions and limitations, commercial property insurance and valuation and co-insurance. I'll take that again. In today's content, we're looking at introduction, then auto, home owners and commercial property insurance, home owners insurance, standard coverage component, exclusion and limitation, commercial property insurance, valuation and co-insurance. Introduction: property and casualty, that is P&C insurance, also known as general insurance or non-life insurance, represents a broad category of insurance products that protect individuals and businesses against loss related to property damage, liability claims and various other risks. So property and casualty insurance or they are non-life insurance, which aim is to protect individuals and business owners or businesses against losses, and these losses has to be related to property damage, liability claims and various other risks. Unlike life insurance, property and casualty insurance typically involve shorter policy terms, usually 1 year, and covers a wide range of perils that can result in sudden unexpected losses. To look at auto, homeowners and commercial property insurance. Automobile insurance definition and purpose. Automobile insurance provides financial protection against physical damage to vehicles, injuries to people, and liabilities for damages caused by vehicle operation. It is one of the most widely purchased form of PC insurance, and it is mandatory in most jurisdictions. So automobile insurance covers or is a financial is a financial protection. So automobile insurance covers damages due to vehicles, injuries to people, and liability for damages are caused by any vehicle operations, and is most popular PC forms of P&C insurance, and this is mandatory in most jurisdictions. Key components: we have the liability coverage. It protects the insured against claims for bodily injury and property damage caused to others. This includes bodily injury liability per person and per accident limit, and property damage liability. We have the collision coverage, pays for damage to collision coverage pays for damage to the insured vehicles resulting from collision with another vehicle or object regardless of. So there's collision coverage, which involves incurring damages caused by collision of vehicle or caused by collision of another vehicle regardless of the fault. We have the comprehensive coverage, covers non-collision losses such as theft, vandalism, fire, hail, flood and animal strikes. This comprehensive coverage covers a lot of insurance aside from all that has to do with non-collision losses such as theft, vandalism, fire, hail, flood and animal strikes. We also have the personal injury protection (PIP), covers medical expenses, lost wages and other costs for the insured and passengers regardless of fault. We also have the uninsured or underinsured motorist coverage, protect the insured when involved in an accident with driver who lack adequate insurance. So we also have uninsured or underinsured motorist coverage. Protect the insured when involved in accidents with driver who lack adequate insurance. So we have seen the collision cover, we have the comprehensive coverage, we have the personal injury protection, and the uninsured or underinsured motorist coverage. So rating factors. Insurance use sophisticated actuarial models to price into insurance based on numerous risk factors. The factors include driver characteristics. So this coverage covers some things based on numerous risk factors. We have the driver characteristics in terms of age, gender, marital status, and driving record. We have vehicle characteristics, make, model, age, safety features. We also have the geographic location, that is urban versus rural, claims frequency in area. We have the usage patterns, commuting distance, and annual mileage. We have definition and scale and scope of homeowners insurance. Homeowners insurance protects residential property owners against losses due to their dwelling, personal property, and liability arising from property ownership. It typically bundles coverage multiple coverages into a single policy. So homeowners is majorly on residential property owners against losses due to fire outbreak or different losses due to flood, dwell or due to their dwelling, personal property, and liability arising from property ownership. So standard coverage component, we have HO3 policy. Dwelling coverage A protects the physical structure of the home against covered perils, typically on an open peril or all risk basis, excluding specific named exclusions. We have other structures, that is coverage which covers detached structures like garages, sheds, and fences, usually 10% of dwelling coverage. We also have the personal property, that is coverage C, covers content and belongings, typically 50 to 70% of dwelling coverage, usually on a named peril basis. We also have loss of use coverage. D pays for additional living expenses if the home becomes uninhabitable, typically 20 to 30% of dwelling coverage. We also have personal liability coverage. E protects against lawsuits for bodily injury or property damage caused by the insured or family members, commonly $100 to $500, $100,000 to $500,000. So we have standard coverage components, and we've talked about that. Exclusion and limitation of this insurance. We have standard home of the homeowners insurance. We have standard homeowners policies typically exclude flood damage, requires separate flood insurance. So it is excluding. The other time I said something about inclusion of flood, but this it is exclusion of flood. This homeowners insurance excludes based on their policy. Some of some some things are excluded. Number one is flood damage, requires separate flood insurance. So there's insurance for flood, there's insurance due to flood damage, there's earth movement, that is types of earthquake and landslide. So earth movement is excluded, flood damage is excluded. We also have intentional losses is also excluded. Then war and nuclear hazard. This homeowners insurance policy exclude insurance based on war and nuclear hazard. Then we have maintenance and related issue and wear and tear. All these are excluded from homeowners insurance and policy. To look at the property insurance purpose and coverage. Commercial property insurance protect business against losses to buildings, equipment, inventory, and other physical assets. It is more complex than personal lines due to the diversity of business operation and exposure. Key coverage forms: we have building and personal property coverage, BPP, protect owned or leased building and businesses, personal property including furniture, fixtures, and equipment, inventory and stock, improvement and betterment for ten ants. Business income coverage covers lost income and continuing expenses when operations are disrupted by covered peril. Includes net income that would have been earned, continuing operating expenses and extra expense coverage for costs to minimize loss. We also have the commercial property and co-insurance. Commercial property policies often include co-insurance clauses requiring business to insure property to a specified percentage of its value, commonly 80 to 90%. Failure to maintain adequate coverage results in penalties at the time of loss. So co-insurance formula: amount paid is equals to insurance carried divided by insurance required times loss minus deductible. Specialized commercial coverage includes builder risk insurance, inland marine insurance, ordnance or low coverages. Thank you for listening.